European ETF market flows continue their positive trend in August 2015. Net new assets during the month amounted to 9.7 billion, close to January 2015's record high of 10.9 billion. Total assets under management are up 17% versus the end of 2014, reaching 4,025 billion, including a 4.8% market impact. Ahead of the change in Fed monetary policy expected before the end of the year, investors are moving their allocation out of risky assets, emerging markets and high yield into equities in areas with modest but safer growth outlook, like European equities. Equity ETF flows rose significantly to 7.3 billion. Investors have favored developed markets with 9.2 billion of inflows. European ETF inflows have reached high levels. ETF in the European region gathered 3.5 billion of inflows. France and peripheral inflows reached record high level at 373 billion and 326 million respectively. Flows were also positive on US ETF at 2 billion and on Japan at 524 million. On the other hand, emerging market outflows have reached record level of 1.5 billion, close to December 2014 record of 1.8 billion. Country ETFs such as India, South Korea and Russia were among the most affected by investor fears of a riskier environment. Interestingly, these concerns on emerging markets have also negatively impacted the smart beta ETF, which registered their first month of outflows for a year. Fixed income ETF inflows were positive at 2.3 billion. Interestingly, these flows mainly concern European govies at 1.3 billion, which is close to January 2015 record high. Investment-grade corporate ETF continue to see inflows, collecting 403 million, while high-yield bonds register outflows of 173 million, with investors fleeing the riskiest assets. Country ETFs such as India, South Korea and Russia were among the most affected by investor fear of a riskier environment. Interestingly, these concerns on emerging markets have also negatively impacted the smart beta ETF, which registered their first month of outflow for a year. Fixed income ETF inflows were positive at 2.3 billion. Interestingly, these flows mainly concerned European govies at 1.3 billion, which is close to January 2015 record high. Investment-grade corporate bond ETF continue to see inflows, collecting 403 million, while high-yield bonds register outflows of 173 million, with investors fleeing the riskiest assets. Commodity flows were negative at 27 million. Broad ETF flows rebounded to 162 million, while precious metal ETFs saw 189 million of outflows. Thank you for your attention, and I will be pleased to see you next month for the September Market Trends Barometer.